Okay, so you've been keeping a close eye on the euro-dollar exchange rate, huh? And you want to know what's next.
Sounds like it.
Well, we've got just the thing for you. A fresh analysis from Pound Sterling Live.
Ooh, nice.
Yeah, dives into all sorts of things like central bank moves and, some of those unpredictable policies from Trump and what it all means for the euro SD rate.
Right, because there's a lot going on right now.
Exactly. For example, did you know the euro just had its biggest weekly jump since July of last year?
I didn't catch that.
It surged like 2.20% just last week, and now it's sitting at 1.0479 against the dollar.
Wow.
The question is, though, is this the beginning of a longer trend or just a blip?
Yeah, is this a sign of things to come or just a quick jump before it goes back down? We'll have to see.
Well, one thing that makes this recent jump interesting is that the euro broke through a key technical level.
Oh, you mean how it was stuck in a downward trend against the dollar for months?
Yeah, exactly.
But with this jump, it pushed above that trend line, the one that began back in September.
Right.
So this could mean we've seen the lowest point for the euro, at least in the short term.
I see. And of course, it also climbed above its 9-day exponential moving average,
Yep, that's right.
which, as you know, can signal some upward momentum.
Definitely a sign to watch. Although we have to remember that with quick jumps like this, like Friday's 0.75% increase,
Right.
there's a chance it might settle down, maybe around the 1.0408 mark.
As the market kind of adjusts.
Exactly. But if the trend keeps going up, it could hit 1.0569, which is the 38.2% Fibonacci retracement level of that whole September-January decline.
Okay, the Fibonacci retracement.
Right. Think of it like a landmark on a map. If the euro reaches it, it might face some resistance, like a hill to climb.
Before it can keep going.
Precisely.
So that's the technical picture, but we can't forget about all those policies coming from, well,
Trump.
Trump, yeah.
The analysis highlights how he's been using tariffs as a negotiating tactic. It even gives the example of Colombia and the whole deportation flight issue.
Oh, right. What happened there again?
So Colombia refused a deportation flight, and Trump, well, he threatened a 50% import tariff on them.
Wow.
Yeah. Needless to say, Colombia changed their mind pretty quickly.
And the tariff threat was dropped.
Yep. It seems like a very transactional approach.
It does. So the question is, could he use that tactic with the Eurozone?
That's what everyone wants to know. And it's a big deal because the Eurozone relies heavily on energy imports.
A lot of that comes from the U.S.
Exactly. That adds a whole other dimension.
It does. So with all of this going on, do you think the euro's recent gains mean it won't reach parity with the dollar?
Well, remember the long-term trend is still downward, right?
It is.
So we have to be careful not to read too much into these short-term changes.
Right.
The experts at MUFG Bank, for example, are saying we shouldn't assume the dollar is weakening steadily.
Okay.
And they specifically pointed to those unpredictable tariff moves from Trump as a source of volatility.
That makes sense.
Currencies fluctuate for all sorts of reasons, so a single jump like this doesn't mean the whole game has changed,
It's just one piece of the puzzle.
Right.
Okay. So we've talked about how the euro has been doing in Trump's policies, but what about those big central bank decisions coming up? The Fed meets this week, and I'm wondering how they'll deal with this more interventionist White House, especially after Trump publicly asked for lower interest rates at Davos.
It definitely puts them in a tough spot.
It seems like their independence is being tested.
Absolutely. And it's interesting to note that the market is currently expecting only one interest rate cut this year.
Really? Only one?
Yeah, I know. You'd think there'd be more considering all the pressure.
Right.
But there's always the possibility that they'll hint at more cuts down the line.
Oh, okay.
And even a suggestion of more cuts could really weaken the dollar.
Because central banks have a big impact on currency values.
Huge. Their decisions, like on interest rates, can make a currency more or less attractive to investors.
Got it. And then right after the Fed meeting, we have the European Central Bank meeting.
Right, back to back.
And they're expected to cut rates, too, by 25 basis points.
Yeah.
And they'll probably say they're going to keep easing policy.
Sounds about right.
But it seems like they're being more cautious than the Fed.
Well, they're in a tricky position. They're trying to boost growth in the Eurozone.
Which has been pretty slow lately.
Yeah, but they also have to keep an eye on inflation.
It's a balancing act.
Exactly, like walking a tightrope. The good news is that recent PMI readings suggest things might be turning around.
So that gives them a little more breathing room to be cautious.
Exactly.
And speaking of economic data, The German CPI inflation numbers come out on Friday, right?
Yeah, and that's something everyone will be watching closely.
Because it could really affect the euro-dollar exchange rate.
Big time, especially if it's lower than that expected 0%.
Makes sense. Germany's a big deal.
It is the powerhouse of the Eurozone. Their
Yeah.
numbers often move markets.
Oh, I see.
So yeah, Friday, everyone will be watching Germany.
Got it. Okay, I think we need to take a break here.
So
We've covered a lot, from the euro's recent rebound to the upcoming central bank meetings and, Trump's trade moves.
yeah, and we're just getting started.
This is just the beginning. Stay tuned for part 2 of our deep dive, where we'll unpack all the details of this euro versus dollar saga.
It's going to be a good one. Yeah, those German CPI numbers could really shake things up.
Right.
If inflation comes in lower than expected, it could give the ECB more reason to keep cutting rates.
Which would probably weaken the euro.
Right. So we've got these central bank meetings this week, and, well, Trump's trade policies are always a bit of a wild card.
Always.
What does it all mean for someone who's trying to understand where the euro-dollar rate is headed?
That's the million-dollar question.
The bottom line is that things are pretty volatile right now.
Okay.
The euro's been showing some signs of life, but it's too early to say if the trend has really reversed.
Is this a sustainable rally or just a temporary bounce?
Exactly. We need to see what the Fed and the ECB do this week, and of course, any news on the trade front could change everything.
It sounds like we have to keep an eye on a lot of moving pieces.
We do, and that's why it's so important to really understand what's driving these currency movements.
Okay, so let's talk about some of those nuances. When the Fed and the ECB make their announcements, what will you be listening for?
Well, with the Fed, I'll be paying close attention to how they talk about future interest rate cuts.
Even if they don't cut rates this time.
Yeah, even if they don't. Any hints about possible future cuts could push the dollar lower.
I see.
And remember, they're dealing with a president who's publicly called for lower rates. It's a whole new layer of complexity for them.
It's almost like they have to factor in the political situation as much as the economic data.
Right. Now, for the ECB, the focus is going to be on their commitment to boosting growth in the Eurozone.
You've been talking about that for a while.
They have.
Right.
Lower interest rates can make borrowing and investment more attractive, which helps to stimulate the economy.
Makes sense. But they also have to be mindful of inflation, right?
Absolutely. The ECB wants to keep inflation close to, but below, 2%. Okay.
If inflation stays low, they've got more room to keep cutting rates.
So if the ECB signals more rate cuts, it could weaken the euro. But if those cuts actually lead to stronger growth, it could strengthen the euro.
Yeah, it's a bit of a paradox. It's all about balance,
I guess that's what makes this so interesting. Okay, so we have to watch the central bank decisions, the economic data, and of course, all those trade policies from Trump.
Right, those are the big three.
It's a lot to keep track of.
It is complex, but we can break it down. The central bank meetings will give us some clues, but we also need to think about the broader trade dynamics between the U.S. and the Eurozone.
Speaking of trade, let's go back to Trump using tariffs as a negotiating tool. The analysis mentioned that he might ease up on tariffs if European countries agree to buy more oil and gas from the U.S.
Yeah.
Could that actually be good for the euro?
That's a really interesting question. At first glance, it might seem like a negative for the Eurozone if they're pressured into buying more from the U.S.
Right. But if you think about it, it could actually lead to a more stable trade relationship, which could benefit the euro in the long run.
So it's not as simple as it seems.
No, not at all. And that's why it's so important to think critically and consider all the different angles.
Out of all of this, what should our listeners be watching most closely in the coming days?
I would say keep a close eye on those German CPI numbers coming out on Friday. They could really set the tone for the euro's performance in the next few weeks.
Okay, German CPI on Friday. Got it. Now, we've been focused on the short term, but I'm curious about the long-term prospects for the euro-dollar exchange rate. Any thoughts?
Well, if the Eurozone can manage to work through Trump's trade policies, and if those energy deals actually go through, it could strengthen the euro's position.
Because it would give them a more secure source of energy.
Exactly. They'd be less vulnerable to external shocks.
So there's a chance that Trump's pressure tactics could actually help the euro in the long run. That's pretty counterintuitive.
It is. It just shows that in economics, things are rarely straightforward. There are always unexpected consequences.
Twists and turns.
Yeah. You have to think several steps ahead to really understand how things might play out.
It's like a game of chess.
Exactly. The best players are always anticipating their opponent's moves.
Okay, I like that analogy. So for our listeners who are trying to figure out this whole currency game, what would your advice be?
Stay informed, be adaptable, and don't be afraid to think outside the box.
Solid advice.
The currency markets are constantly changing, so the best way to navigate them is to stay up to date on the latest developments and be willing to adjust your thinking as needed.
Excellent advice. Well, we're going to take a quick break, and then we'll be back to wrap things up with our final thoughts on the euro versus dollar showdown.
You got it. Stay flexible.
So we've covered a lot of ground in this deep dive. We've analyzed charts, deciphered economic jargon.
We even got into the mind of Trump.
We did. All to understand what might be next for the euro against the dollar.
It's been quite a journey.
It has. So let's recap. We started by talking about the euro's recent rebound, breaking free from that downward trend.
Which is definitely a positive sign.
Right. Although, we also have to consider those Fibonacci levels, those potential roadblocks on the euro's journey upward.
Like speed bumps.
Exactly. And then we dove into the central bank scene.
Where the Fed and the ECB are trying to navigate this whole new world of, well, increased political pressure.
To say the least. Their upcoming decisions on interest rates.
Yeah, those will be crucial.
Especially with everyone on edge about whether the U.S. economy is heading for a slowdown.
And how that might spill over into the Eurozone.
Right, it's all connected.
And then, of course, we can't forget about Trump and his trade tactics.
Oh, the tariffs. Is he going to ease up or double down?
Who knows? That's the thing with Trump. It's so unpredictable.
It really is. But that uncertainty is actually a key factor driving currency movements right now.
It injects a whole lot of volatility into the market.
It does. So, for our listeners who are trying to make sense of all of this, what's the key takeaway?
I'd say this. The euro-dollar exchange rate is at a crossroads.
A crossroads. Okay.
On the one hand, you have these positive signs, the euro's rebound, possible easing of trade tensions.
But on the other hand,
You have the uncertainty surrounding the Fed, the ECB, and of course, the unpredictable nature of Trump's policies.
so buckle up. It's going to be a bumpy ride.
Fasten your seatbelts, because no one knows for sure which way things will go.
It's a nail biter.
It is, but that's what makes the currency market so exciting.
That's true. It's always a game of strategy, trying to anticipate what's coming next.
Exactly, just like we've been doing in this deep dive.
And on that note, we've reached the end of our deep dive into the euro versus dollar saga.
Thanks for joining us.
We hope you enjoyed this journey through the world of currency exchange.
And remember, stay informed, think critically, and don't be afraid to challenge your assumptions.
Because in the currency game, anything is possible.
Until next time.